we need more ambition. We need clear targets, an enabling policy environment. We need, critically, the financing to make it happen. That is why the Climate Club considers this mapping exercise that we'll hear more about today to be so important. When we launched the first edition last year, it really filled a major knowledge gap and helped shine a spotlight on the urgency of scaling up support. It also contributed directly to the COP29 Global Pledge, which was a collective commitment to do more and to do it faster. This next edition is helping build that foundation. The update that we'll hear more about today, from our perspective, serves two purposes. First, to track progress and identify new trends, which we'll hopefully hear that we are seeing progress. And secondly, to inform both the organization of the pledge that I just mentioned, as well as the work that has grown out of that in the COP30 working group on green industry support for emerging markets and developing economies. What is already clear is that while progress has been made in recent years, more remains to be done. That we saw that from the last year's launch of the report. International assistance, financial and technical, still needs to be scaled up, broadened, and better targeted. At the same time, we can see encouraging signals. We've heard a lot of really encouraging developments in our work since then. New funds and programs have been launched. More financing is being mobilized. From the perspective of Germany and the co-chairs of the Climate Club, we really think momentum is growing. I think today's workshop will take us deeper into these findings and provide an opportunity to reflect together on how to maintain and accelerate this momentum that we're seeing. Having said that, I really look forward to the discussion with all of you today, and in particular to the insights that our colleagues who have worked so carefully on this next version of the mapping will share with us. So thank you for being here. Thank you to the colleagues in the Secretariat and OECD for your work, and back to you, Michael.
Great, thank you so much, Rachel. So before we begin the presentation, it'll be good to go over some housekeeping rules. So if we could please ask you to rename yourselves with your organization and then your name. Note that this session will be recorded and made available on the member-only One Community platform. And we would also kindly ask you to keep yourself muted and use the raise the hand button to indicate an intervention. So without further ado, I'll pass the floor on to you, Cecile, to begin the presentation. Thank you.
Thank you very much, and good afternoon, good morning, and welcome to all participants. Thank you very much for joining this meeting. We are very pleased indeed to share with you these findings, the update of the mapping. And I'll start actually with a few words of introduction. So next slide, please. First, so just to briefly recap, how does this mapping fit into the Climate Club work program? So to recall that it is developed under the Pillar 3 on boosting international cooperation and partnerships, and under the Module 7, which provides knowledge products that focus on the mobilization of private capital, including also the financial toolkit that we have presented earlier this year. And this module complements the global matchmaking platform that you're already familiar with, and the Module 6 on capacity building, policy consultation, and advice. Next slide, please. So quick reminder of what is the mapping. Last year, we developed this first edition, which presented the state of play of the support that has been provided so far for industry decarbonization in EMDEs. And with this mapping, we identify key trends. What about the scale of the assistance, the type of provider, the types of recipient, and the types of financing instrument used, and which type of project have been targeted. Next slide. So as it was mentioned during the opening remark, last year the mapping outlined that overall the assistance for industry decarbonization has not received the necessary attention so far, and this was reflected indeed in last year's Climate Club member statement for COP29, and as well as informed the COP29 Global Pledge that was also mentioned during the opening remark. And to support the implementation of this Global Pledge, it is important that we continue tracking the progress on international assistance. And this is why we are updating this mapping this year. Next slide, please. So in this update, we include the latest trend and the latest data available in terms of international assistance for decarbonizing industry in EMDEs. Just to remind also that this mapping will also feed an OECD-IEA joint study on the gaps in international assistance for industry decarbonization that we are currently preparing. And the mapping will also inform the working group on green industry support for EMDEs in the context of COP30. What does the mapping cover? So as last year, in terms of sector, we mainly focus on the three industry subsectors: steel, cement, and chemicals, which account for around 70% of global industrial emissions. In terms of sources of financial assistance, we cover the public bilateral and multilateral sources towards the EMDEs, as well as the private finance mobilized by official development intervention. And these two items are covered by OECD database that are updated every year. We also cover funds and programs, so climate funds, IFI's program, philanthropy program, this program which can support industry decarbonization. And based on this new insight, we can confirm or update or draw new key messages. Next slide. So here are the key messages of this update, and we will go into more detail in the upcoming part of the presentation, but here you have an overview. So when we compare to last year's results, we see that increasing the assistance for industry decarbonization in EMDs is still needed, of course, but there has been some progress over the past 2-3 years, progress that we could capture in this new mapping edition. First, we see a significant progress on public bilateral and multilateral support and the related private finance mobilized between 2020 and 2023. We will look at this in more detail in a few minutes. And this was mainly as a result of increased official development assistance level during these years in general. But this also means that in view of the outlook for ODA, so the ODA cuts that are envisioned in the coming years, that means that this growing support for industry decarbonization may not continue in the next year. So that will be important to continue monitoring and tracking the progress. Second, we see that there is a need to increase the share of climate mitigation related flows in the total development finance that target the industry sector, namely mainstreaming the decarbonization aspect in the assistance that is provided to industry development. And by doing that, that would help to mitigate the impact of ODA cuts precisely on the support for decarbonization activities. In terms of the characteristic of the financial support, there is still the need to diversify the pool of provider, the pool of recipient country and instrument used. So that was last year's conclusion from the mapping. But we have seen also some progress over the past year, and we'll also detail this in a few minutes. And one area of progress refers to the type of activities that are targeted by the assistance. We see that it's more and more focused on industrial projects themselves, namely projects that directly impact the facility, directly impact the manufacturing process, rather than capacity building or assistance for government. So meaning that we are more focusing on industrial projects themselves and including some examples of disruptive technology. So this is quite a new trend that we identified compared to last year. Then there are various funds and programs which can cover industry decarbonization for EMDs. And as last year, we still conclude that most of them are not necessarily targeting industry specifically. Most of them are transverse or cover many other sectors. However, last year, we highlighted that there was a growing interest from IFIs and funds in developing specific funds and programs for industry. And we see some positive development this year with new programs indeed and new funds dedicated to industry emerging. So this last year identification of potential new funds have materialized. And as we captured these trends, indeed, it will be important, as I was mentioning, to continue monitoring, tracking, especially in light of the outlook for ODA. And also so that the mapping can help to sustain and support the momentum and the call for scaling international assistance for industry decarbonization. So next slide, please. And now we'll start digging into the results. First, on the bilateral and multilateral assistance. Next slide, please. So when we look at the total cumulated amount of public bilateral and multilateral support provided from 2000 up to 2023, we see that it reached around 1.5 billion. So it's still quite low in total, where we have for these three sectors, so steel, cement, chemical, this amount of 1.5 billion. And beyond this amount, it's also very important to note that these three sectors, so steel, cement, chemical together, represented less than 1% of the total mitigation-related development finance, meaning that there is no specific increasing focus on the industry sector itself. And this, despite their significant share in terms of emission. Next slide, please. So that's the picture for the 23 years. But if we now focus on the update, so last year the mapping was giving the amount up to 2021. And if we look specifically at what happened between 2022 and 2023, we see that the total support that has been provided over 2 decades has increased by more than 1/3 in just 2 years. So there has been a real outstanding growth during these 2 years, 2022, 2023. What we see is that this growth was driven by an overall increase in the total mitigation development finance in 2022 and 2023. So meaning it was due to an increase not just for industry, but for all sectors. And this is mainly due first because of the official development assistance increase, but also we've seen an increase in the share of climate mitigation related flows in total development finance. So we had two drivers, and as I was mentioning at the beginning, given that one driver is driven by ODA increase, it will be very important to continue monitoring this in view of the ODA trends from 2024 that may jeopardize this growth. Next slide, please. So that was insight about the amount, but now if we look at the characteristic of the financial flow themselves, what we see is that they are still characterized by a very limited pool of provider, recipient, and financial instrument. So if we look at the overall picture between 2000 and 2023, the conclusion remained the same. However, if we look specifically at what happened in 2022 and 2023, we see some emerging trends with, for instance, a slightly rising share of bilateral providers during these years. And in terms of recipient, we see the emergence of non-typical recipients. So for instance, Bangladesh or the African region. And also Ukraine was not targeted contrarily to previous year. And as I was mentioning in the key messages, in terms of project, we see more and more projects oriented towards facility transformation, manufacturing process themselves, and also including new type of technologies such as green hydrogen. Next slide, please. So we move now to the private finance mobilized from official development finance intervention, so which still rely and focus on OECD database. So exactly the same exercise if we look at the total amount cumulated. So for this specific data, we cover from 2012 up to 2023. So it's now up to 2 billion USD that have been mobilized for the steel, cement, and chemical sector together. So again, if we look at this amount, in general, it's still limited. And again, very important to note that these three sectors together represented less than 1% of the total recorded mitigation private finance mobilized. So industry is still a very, very low share of the development finance. But very interestingly, we see that one quarter of the total development private finance mobilized for the steel, cement, and chemical sector were actually mitigation driven. So that's 1/4 of the total development finance. Next slide, please. Again, if we look at specifically what happened between the first edition of the mapping and the new update, so between 2021 and 23 for this type of data, we see that the total private finance mobilized since 2012 has increased by 2/3 in just 3 years. So again, the huge increase that we saw from the public side is also reflected in the private finance mobilized. And actually, the reasons are the same, so I'm not going to detail more, but this was driven by the increase in the total mitigation private finance mobilized, which, I mean, in the end, also comes from the increase in the total private finance mobilized, as we saw the increase in ODA, and also the increase in the share of mobilized private finance for mitigation activity, as I was mentioning just before. Next slide, please. And again, if we now look at the characteristics of the financial flows, so beyond the amount, we see that diversification is still needed again, but we see recent development, specifically between 2021 and 23, that reflect a kind of reversal of the trend that we saw, particularly on provider and recipient. Again, we see an increasing share of the bilateral providers, contrarily to previous year. And very interestingly, in terms of recipient country, we see a strong focus, very strong focus on the Africa region, with 70% of the flow for this year directly targeting this region. So more diversification in terms of country, but it's still very important to note that the countries that are highly industrialized and growing, in particular in Southeast Asia, still remain not really targeted. Next slide, please. So I stop here for the public and private finance mobilized, and we continue with another chapter of the mapping, specifically focusing on the funds and IFI program, and I give the floor to my colleague Amelia. Thank you.
Thank you, Cécile. So here we'll have a look at the existing channels of funds in various IFI programs. We collected our data from the NDC Partnership Climate Funds Explorer, which is an open database of climate funding opportunities and support for climate-related activities. As of September 2025, the database highlights a total of 150 funds, which are relevant for climate finance or contribute to achieving climate mitigation, adaptation, or resilience objectives. Similar to last year's finding, we found that various existing funds within this database could support industry decarbonization projects, but most of them are transverse or not solely dedicated to the industry sector. This means that the funds are either not sector-specific in their target recipient sector or consider the industry sector but from a wider perspective, including technology innovation, energy efficiency, or infrastructure. From the slide, we see that we have identified 30 funds within the database that relate to industry. These funds consist of those identified in the 2024 version of the mapping report, as well as new funds added to the database within the last year. Between 2024 and 2025, a total of 3 new funds relevant to industry decarbonization were added to the database. This includes the ADB Climate Change Fund, the Climate Innovation and Development Fund in partnership with the Bloomberg Family Foundation and the Goldman Sachs Charitable Gift Fund, and the Green Climate Fund Project Preparation Facility. On the, if you can go back. On the right-hand side on the chart, you can see that majority of the 30 funds covering industry are transverse. But in comparison to last year's finding, we saw that the amount of funds that are transverse or have decreased from 50 to 42%. So we see that more funds are now targeting industry via a sectoral approach or indirectly through technology innovation. Although transverse funds are valuable vehicles for advancing industry decarbonization, more targeted funds could significantly impact industrial emissions more. Next slide, please. Beyond the Climate Funds Explorer database, the 2 funds have merged with potential groundbreaking impact for industry decarbonization. The first being the Climate Investment Fund's Industry Decarbonization Program, and the second being the Green Guarantee Company. Both provide millions of dollars in investment opportunities for industry decarbonization. I'll start first with explaining a little bit about the Climate Investment Fund's Industry Decarbonization Program launched this past year, which devotes a total of $1 million to decarbonize heavy industries. And it hopes to target high-emitting industries in developing countries such as Brazil, Egypt, Mexico, Namibia, South Africa, Turkey, and Uzbekistan. And this is often through investments in low carbon and climate resilient technologies. Then the Green Guarantee Company will leverage an initial $1 billion of guarantees, which are applicable to bonds and green loans. And overall, guarantees are very useful in reducing the financial risk for lenders and investors and can curb the high upfront costs and technology risks associated with industry decarbonization projects. Next slide, please. Now, this slide looks at our compiled research on a list of 19 IFIs and funds, and this is also beyond the Climate Fund's Explorer database. And here we looked at these 19 IFIs and funds and had a few interviews with them to understand the current assistance towards industry decarbonization. We found that more than 70% of the sample covers industry in some capacity, and 40% of the sample include new decarbonization projects released in the last year. This shows that there is a growing interest amongst many IFIs and funds in investing in industry decarbonization, but there are still opportunities to increase funding opportunities. Next slide, please. One key project identified in our interviews for this report is the Turkey Industrial Decarbonization Investment Platform. Now, this is a joint platform with the EBRD, the World Bank, and International Finance Corporation, and it will act as an investment tool to accelerate decarbonization efforts in Turkey. It aims by 2030 to deploy around $5 billion in investments and create a reduction in more than 20 million tons of carbon emissions annually. It will focus on technology solutions, knowledge sharing, finance, and technical support, amongst other priorities. Next slide, please. And so the IFIs that I spoke briefly about that we interviewed include the Asian Development Bank, the European Bank for Reconstruction and Development, the Green Climate Fund, the International Finance Corporation, the European Investment Bank, Climate Investment Funds, as well as the Eurasian Development Bank. And we found some key differences between last year's 2024 version of the mapping report and this year's. So for once, last year we had seen that there is a growing interest in developing specific funds and programs for industry decarbonization. This still remains true this year, but actually we see that projects are being developed as a result of this interest. And we were able to find more projects that we will highlight within the mapping report itself. In addition, we found that last year we saw a variety of instruments being used, such as concessional loans and blended finance programs. Now, although this still remains true, we see that at the project level, many of them focus on incremental emissions, and investment in breakthrough technologies are increasing, but there are still opportunities for expansion using these instruments. And lastly, we also saw last year that a lack of project pipeline and market risks appear to be the most critical barriers towards industry decarbonization. Although this still remains true, in this year's report, we also found that IFIs find regulatory risks as critical barriers towards industry decarbonization projects, especially towards innovative technologies such as hydrogen development. And there needs to be the right enabling conditions for investments towards industry decarbonization, and to make these types of projects more bankable. I will carry on to the next slide and pass it to my colleague, Eleonora, who will have a short breakdown of the assistance of philanthropies.
Thanks, Amelia, and good afternoon, everyone. So this slide focuses on the assistance from philanthropies section of the mapping report. And to put this all into context, according to ClimateWorks, industry accounts for 2 to 3% of philanthropic spending on climate mitigation. This, of course, suggests room for further prioritization for industry, especially given the much larger percentage that industry accounts for in terms of overall emissions within climate mitigation. So to look into this a bit more closely, our analysis in the mapping report took a bottom-up approach, looking at a sample of 138 grant opportunities from 14 different philanthropies between the years 2020 and 2024. We expanded our coverage in terms of the philanthropies and the grant opportunities that we looked at this year by adding quite a large amount of industry-focused grants to this sample. So out of that sample of 138 different grants, 103 of those targeted industry either directly or indirectly. This finding is to be taken with a pinch of salt because we had a bias in terms of the grants that we were looking for to target more grants that have industry as a focus, but this gives you kind of a flavor of the type of grants that we had in our sample. And the sample now covers around $88 million spent on industry decarbonization. So 3 main things to note from our analysis of this sample of grants. The first is that tracking flows of grants is a challenge with philanthropies, specifically because often the receiver of a grant will re-grant that funding to other actors, often closer to the ground, or that are more specialist than the original grant receiver. There's also an issue in terms of data availability and granularity, which varied quite significantly across different philanthropies. And I'll come back to that later. The second point is that it's important to note that the role of philanthropies is of a different nature and scale to the other sources of finance that we've discussed so far in this presentation. So philanthropies specifically support a wide range of different activities, from technical assistance to roadmaps and policy development. And the overall volume of spending tends to be lower. However, philanthropic assistance, partly because of that overall volume being lower, can be more flexible, innovative, and disruptive than funding from other sources. And a final finding from our sample of philanthropies is that across the grants that we looked at that targeted industry, either directly or indirectly, a large majority of those, so over 90%, did not specify if they had a regional focus. Among those few that did, so the 10% that did, most targeted Asian countries with a particular focus on China and India. So this is a flavor of the key findings from the philanthropy section of the report. And move on to the next slide, please. So in terms of next steps for the mapping report in general, the report will be sent to Climate Club members for comments and feedback in November, with publication planned for early 2026. I'd like to also reiterate a few of the implications of the mapping updates outcomes that Cecile already mentioned at the beginning of the presentation in terms of the contribution of this analysis to the international dialogue. It's clearly important to continue monitoring these trends in the coming years, particularly, as we already alluded to, in the context of ODA cuts. And second, we think that there is strong potential to use this mapping and the outcomes of it specifically to sustain the momentum on scaling up international assistance for industry decarbonization in emerging markets and developing economies. One example of that specifically, so an area of work where this analysis is supporting that momentum, is the upcoming study that we're preparing together with the IEA to support the COP30 working group on green industry support for emerging markets and developing economies that Cecile mentioned earlier in this presentation. This report will take stock of the technical and financial assistance for industry decarbonization in emerging markets and developing economies, and also provide an assessment of the investment requirements over the next decade to align those markets and the industrial sector, specifically in those markets, with net zero pathways. We have a few upcoming discussions and events on this topic specifically here at the OECD. So particularly next week on the 6th and 8th of October, here at the OECD headquarters, we'll be looking at the report more closely. Next slide, please. So to finalize this presentation, we have a few guiding questions targeted to the various different stakeholder groups that are in this call today. So as a first question, targeted more specifically to IFIs, what is your current scope of industry decarbonization projects, and is there any emerging trend on the type of projects or the type of technologies or any new financing instruments? Second question targeted both to IFIs and philanthropies. How have project development and challenges to financing industry decarbonisation in EMDEs evolved in recent years? And then 2 questions to the Climate Club members in the virtual room. What type of initiatives is your ministry currently undertaking to finance industry decarbonisation projects? And what are the main challenges in financing industry decarbonisation within your country context? What type of solutions do you think would be necessary to address these challenges? So with that, I'll hand the floor back to my colleague Cécile, and we're looking forward to hearing your considerations.
Thank you very much, Eleonora. And then indeed, that's time to open the Q&A session. So we really also like to hear from IFI representative to hear about insight about current programs as we touched on this point, and also to illustrate example of project program that could also support the findings or also be included in the report. So please raise your hand. So both for question, but also intervention regarding your current project portfolio, that will be very helpful to continue feeding the report. So please please raise your hand, and the floor is yours. So I see several IFIs in the representative of funds in the participants. So maybe, yeah, we see. Yeah, Daniel Maurice from SIF.
Thanks, Cécile and team, for the presentation. I'm happy to go first, especially because our program was kindly highlighted by you. Can you see me? I can't tell if...
We can hear you, but not see you indeed.
Oh, weird. Okay, I don't know why my camera's not working. So sorry about that. Let me see if I can work on that while we chat. But let me start off by applauding the work that's been done so far. I think this is an incredibly useful exercise. Indeed, as we have established ourselves in this space and been in conversation with the different players, we have really come to appreciate that the financing ecosystem for industry decarbonization is quite mature, especially when considering its age. It's diverse in that there are a lot of actors coming together to try and make an impact, and yet it does not have, I think, a wholly coordinating body, one group where someone can come and get access to all these things. There are many good efforts out there. I mean, obviously, you guys in the Climate Club are doing excellent work. The global matchmaking platform is really connecting a lot of dots, but I think this report is another step in sort of really having a coherent approach amongst the different actors in the space. So we welcome it. We also welcome it because we in the SIF have made a pledge as part of efforts involved with the working group, that some of the COP30 working group that many of you participate in. We've made a pledge to use our process for developing industry decarbonization investment plans in the 7 countries that were listed in your presentation, to coordinate technical assistance, additional financing, and other opportunities that exist for those 7 countries beyond our envelope of resources. I should note, for those who aren't aware, we have told those 7 countries that they can request up to 250 million in concessional finance that they can access from us to help build out their pipeline and develop a coherent, cohesive strategic plan to execute that. But we know that there's other pots of assistance out there. And so part of our role in facilitating this process for the countries, which they lead, and they own the process, and the multilateral development banks are partners who will implement the projects. They lead the actual work, right? So with all that going on, there's lots of conversations happening. It's a good opportunity to make everyone aware of these different opportunities. And we have been doing some work to try and make that happen, working with others. This report, I think, will be really, really helpful for us to kind of fully understand what's out there for these 7 countries. Additionally, there are 19 other countries and regional groups of countries that requested an opportunity to prepare an investment plan with us. We've been instructed by our board to find ways to support those countries as well. And I think this report will help us steer those countries in finding additional support in this space. So it's really, really valuable as far as I can see. We would love to be able to see early versions of it to ensure that we're fully coordinating our efforts. And just want to appreciate the work that's been done again. On these guiding questions, I'll just make a couple observations that we've made in the time that we've been actively facilitating this investment planning process. Just for those of you who may not be familiar with the SIF process, we launched the program back in 2024, and we had a process for reviewing and selecting country expressions of interest to participate. In June, our board selected those 7 countries that were listed, and now they are undergoing the investment planning process. That process involves the development of distinct pipelines for that will request financing from the envelope that we have offered. So those countries came to us with sort of broad senses of what those pipelines can look like. And now we're engaged in the process of really narrowing down the scope of what work can be done now and in what form can it be done. And so within that view, which again is narrow in the sense that we're focused on these 7 countries and their priorities and what they're interested in, but also is narrow at this time because we've only begun the process in 2 out of the 7 countries. So the way the process works is we usually start with what we call a scoping mission, where basically countries, MDBs, private sector, civil society, everybody comes to the table and they kind of put their cards on the table and say, this is what we want to see happen. We have done that process in Brazil. We have done that process in Namibia. Both of those missions were held earlier in September. We have a mission coming up in Turkey, in Egypt, that are scheduled for late October, early November. And then we're looking to schedule meetings for Mexico, South Africa, and Uzbekistan. The reason I'm talking about a lot of process is because I want people to have a good sense of what we can see right now. And what we can see right now is, at least in Brazil and Namibia, an emerging pipeline of projects and directions of travel. And what we are seeing, at least in those 2 countries, is a really strong emphasis on green hydrogen. Both countries have clearly expressed a desire to develop hydrogen infrastructure, to deploy electrolyzers in multiple ways, and develop really hydrogen hubs. The idea being that that feedstock can be used for multiple things. I think in the case of Namibia, they are exploring not only using green hydrogen to develop ammonia for export, but also they're looking to use it within their steel sector to help green steel facilities that they already have. So in terms of this first question, we're seeing a lot of emphasis on green hydrogen now. That could change depending on the priorities of Turkey and Egypt and the other countries that I named, Mexico, Uzbekistan, and South Africa. I will say expect that Egypt will also have a big focus on green hydrogen. Turkey, they had a number of things that they said they wanted to work on, and the direction of travel will be determined here in a couple of weeks. But we're seeing a lot of emphasis in green hydrogen now and expect that that will probably continue moving forward. How these projects will be supported in terms of clear financing mechanisms. What I can say is that we primarily provide concessional loans, highly concessional loans, and we expect that senior and subordinated debt will continue to play a really important role in the pipeline that we execute. But we are also building out a suite of what we in the SIF call higher risk instruments that can be used to support this work. think guarantees, think equity investments, think mezzanine financing and things like that. I think guarantees will play an increasing role, and we're seeing a lot of interest in guarantees, especially because the larger international financial architecture is embracing guarantees in a way that they haven't done as much in the past. There's more emphasis on it these days, I guess I'll say that. So we expect that guarantees will continue to play a prominent role. But let me just finish by saying the type of instruments that get used are very place-based and very specific to the countries. And part of our process, and the reason why it does take some time, is we want those conversations to happen with the right players. So countries making clear their priorities, MDBs sharing their expertise and their ability to execute, bringing in private sector, bringing in civil society stakeholders, including labor and workers on the ground, to ensure that the finance instruments that are used can be as impactful and transformational as possible. Let me stop there. I apologize for taking up so much time, but I really appreciate the work that you guys are doing, and always appreciate the opportunity to engage with this ecosystem. Thanks.
Thank you very much, Daniel, for the comprehensive overview of the program and for also practical example illustration. This is very useful for our report, and thank you for your continued cooperation. We really appreciate that. Thank you. So we can indeed continue, still open the floor for either question from government member or also other example of programs. So I see other IFIs representative joining us, and from World Bank, or maybe also from philanthropies. So please jump in to share your insight, to the interesting insight to share, and also for feeding the report or confirm the trends that we have highlighted. So.
There's Alex.
Yeah, Alexander Sharabarov from World Bank, please.
Good morning. Good afternoon. And Amelia, sorry I didn't respond to your email. My name is Alexander Sharabarov. I'm a senior energy specialist with the World Bank. I am with the region of Latin America and the Caribbean. I just joined the World Bank from IFC. So I spent 13 years at IFC, where I worked on industrial decarbonization, and I just moved. So I don't think it's really appropriate for me to talk on behalf of the bank yet. I'm still grasping the program. And I see that my colleague Shay from IFC is not here. But I think from what I'm seeing, just very initially, the industrial decarbonization is very high on the agenda. It's a big part of our business development throughout the region. I think Brazil and Mexico, from what I see so far, are where the most of the focus is. Compared to IFC, which looks more at which, first of all, for those who don't know, IFC, International Finance Corporation, is part of the World Bank Group. And it focuses on private sector, whereas the World Bank works with national governments. And again, this simplistic, maybe it's overly simplified, but IFC finances private companies and the World Bank finances national governments and local governments. As you could imagine, most of the activity with industrial decarbonization is on the private sector side. But what the World Bank has been doing, of course, it has a policy dialogue with countries to support the enabling environment for industrial decarbonization. Focus on the tariff regime, which often electricity tariffs and energy tariffs at large, which often impede progress towards industrial decarbonization, as well as focusing on financing state development banks. And so I think, again, I just joined, so I'm still kind of grasping the program, but I think that the difference between IFC and the bank is that IFC focuses on specific clients and works on their specific programs. World Bank by nature of the sector, focuses more on state development banks. So the World Bank would finance state development banks, which would then finance industrial decarbonization activities. So just maybe to summarize again, it's very important for the bank in the region of Latin America. This is a very important agenda. It's prominently featured in our business development, in our pipeline. So I'll probably stop here. Happy to answer any questions. Thank you.
Thank you very much, Alexander. Very nice to the meeting, and certainly we continue the discussion also for finalizing the report. And actually, I see I think Seyi from IFC there. Can you hear us?
Yes, can you hear me? I raised up my hand as well. I'm not sure if it's showing on the.
We can see you and hear you now. Perfect. Yeah.
Oh, okay. Thanks, Alexander, for the and thanks for the invitation and introduction, and thanks for the report and all the analysis that has been done there. I think it's quite very insightful. From IFC, there's quite a lot, like Alexander said, there's quite a lot of focus for us on industrial decarbonization. We've been spending quite some time to look at this because our focus is creating jobs, but we also want to create jobs sustainably in emerging market. And specifically on the sectors that you have highlighted, we've been very engaged in those sectors: cement and steel and petrochemicals or chemicals, as the case may be. So we've been trying to put together, call it a strategy, call it a framework or approach. How do we want to approach this as IFC to make sure that we can be impactful in this space? And behind that approach, we put in some kind of ambition. Ambition is in the next 3 to 4 years to kind of mobilize about $30 billion in the emerging markets, focused on these hard-to-abate sectors, to kind of catalyze decarbonization there. 10 from our own and mobilizing 20 from others. It's quite a very comprehensive, and we started working on that. And the way we also envision the solution space is that we understand that there are some technologies that are technically and commercially available. How do we accelerate those? There are technologies that would need some kind of support in terms of constitutionality, or how do we help the cost, especially in the emerging markets where there are no incentives. So how do we support those? And then the other bucket is to see and look at technologies that are coming up in the space and see how do we make some of them more promising, how do we identify those, and also make them to a part of the solution space. And across all of this, we continue to engage and have some kind of pipeline. So on the technologies that are ready and make commercial sense, we continue to finance both in steel and in cement and in glass. We have some examples in the last year, and what we kind of try to see now is also a kind of demand for legal products, green bonds, sustainability-linked bonds and loans and things like that. So we kind of start to see those kind of trends. And also in terms of circularity, using 100% scrap in steel, things, those kind of projects, we also try to see. On the second bit, Daniel mentioned quite a number of green hydrogen projects in some of the seed countries. We're engaged in some of those. But also beyond that, it also on the CCUS side, we also started to look at that, especially in the decarbonization, and see what can we do and how can we help to move the needle in those areas. So that's something we've been working on. And in the new technology space, we also we have been engaging, and we've made a couple of investments in emerging promising emerging technologies. You can talk about Boston Metal, for example. That wants to produce steel with almost zero carbon. So that's a new technology which we have made equity investment in, and we're also trying to support the scaling first facility for that. There is another one that is looking at thermal energy storage, even though we also kind of make an investment in that, and also try to support the rollout of that in emerging markets. So that space we are also watching and kind of try to identify promising technologies. There is one of our regions that is also developing some kind of programs because we saw that there is a space where there is funding needed for some of those promising technologies to be able to break through. So we're focusing a bit on that. Some of the things we also start to see is we start to engage in is funds as well. Some kind of funds that are looking, especially in Asia and Europe and LAC. There are some funds that are dedicated to industry and industrial decarbonization. Some of those we are also engaged in and try to play a role there. And in the kind of we are also very active in project development. So it's not just in the financing. There are quite a number of the projects, like the green hydrogen and things like that, where we are engaged in the project development phase through our upstream kind of offering. The upstream means we put in some money. The project developer or the sponsor put in some money, just to co-develop those kind of projects. So we do have quite a number of projects either in green hydrogen or in that space as well, and in other sectors where we will co-develop the project with the aim of financing the project when eventually the project becomes ready for financing. So I'm not sure how this is captured in the report, but that's also another area where we are operating. So I think in terms of challenges, so in some of the things, there are some of the technologies, for example, Cassandra in the LC3. We're having some discussion, and it's adoption. How do we accelerate the adoption of some of this? We know it works, yeah, but there are still a couple of challenges around those kind of technologies. Either it's weak regulation, low consumer demand. Where also in some cases you need standards to be able to be in place before those kind of things can be adopted. So sometimes there is also a cost delta. They know it works, but there is a delta in cost because the incumbent is cheaper. So how do you overcome that? So those are some of the things we see, and we're also trying to see how we can intervene in those areas. So once again, thank you very much. I will stop it.
Thank you very much for your insight also, and yes, answering to the several questions, and thank you also for different discussion we had indeed to prepare the mapping report, and we will follow up certainly also as we progress on finalizing the report. But thank you for all these example and practical example of what you can experience on the ground. Maybe I just check if there is a question from Climate Club members, from government representative from philanthropies. If, as we also explain, I mean, we have a chapter in the report on philanthropy support. So if you want to jump in on example of program or reflection on what we've presented. I don't see any reaction, so maybe yes, we have a question for Colombia, please.
Hello, thank you. Can you hear me?
Yes, sure, please.
Yes, I just write in the chat. In many cases, in our context, for financing to materialize, it is necessary that it includes technical support from the outset, from the beginning of the project, in its structure, overcoming technical barriers and reducing risk. Many times there is there are many difficulties to foster these processes within the industry. So if it is possible to include this support from the beginning of the project, it will be more feasible to advance. Additionally, it is important to include monitoring schemes and reporting to governments on the impacts. Additionally, to CO2 reductions, also in social, environmental, and competitiveness indicators. It will be like to show all the impact these big projects can foster also in the value chain, in the small industry, and in the productive development within the regions. And finally, it's also it would be important if from the financial schemes, it could be like this important space in the Climate Club to share success stories and lessons learned for the industry to allow the multiplication and scaling up of these cases. Thank you.
Thank you very much. And actually, so it's point well taken on the fact that indeed the technical assistance is also equally important and should be accompanying financial assistance. So that's really indeed the objective of the report to ensure that, I mean, we cover both and that we call for more assistance both from a technical side and financial side. And regarding a successful example, just maybe to remind that indeed this is something we are focusing on, looking at in specifically the financial toolkit that we released earlier this year. So that's something we continue working on, and indeed the more example of success stories that could where we could have key learning that could be replicated, that's something very important and that we keep on working on. So thank you very much for your intervention. Maybe just checking if there is no other question, intervention, we can now go for the closing, I think. So just checking last time if there is no hand raised. No. Okay. No. Okay, so thank you again for joining, and thank you for joining from this and giving your insight on several program progress. Of course, as we mentioned, as next step, we'll continue reflecting, so including some feedback and an example of project in our report that we are currently working on. And I would say, as it was mentioned, we will share a draft report with Climate Club member in November with the objective to publish early next year. So we'll ensure that we'll come back to you, and also with some of the stakeholders that we interacted indeed with for IFI program or fund, that we will also ensure that that you can provide feedback, and so that we can prepare the report. And in the shorter term, maybe also to recall that in the road to COP30, so this part of the outcomes will feed into indeed the joint study with the IEA on the gaps on international assistance for industry decarbonization. So that will come also in the coming months. So overall, I mean, we keep on working on this, and we keep you updated on the next phase of the report. And thank you again, and thank you for your collaboration and continued support. Thank you very much.
Thank you.
Thank you.